Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. And on the line with us today is returning guest Warren Irwin. He's the Chief Investment Officer of Rosseau Asset Management Limited. We had Warren on a few months ago to talk. The focus, of course, was on uranium. Warren's a major investor in NextGen Energy. Warren, welcome back to the program.
Well, thanks for having me, Colin.
Yeah, I want to start off by saying that we put out a pretty big call last Wednesday this week. It was December 4th. We put out a call that uranium had bottomed, the uranium stocks had bottomed. And Warren, I was discussing this with you before we hit record here. I was just taking a look at some of the largest institutional held stocks in uranium, companies like Cameco, Uranium Resources, URG, UEC, and noticed a trend that a lot of them had started taking off the bottom around November 5th, November 12th time period. On top of that, just a couple weeks ago, Uranium Participation Corp, which is a proxy for the spot price of uranium, began trading at a premium to the price of uranium, which typically happens when bullish sentiment comes into the market. Sure enough, it appears that the uranium spot price has moved up for the first time in several months, up about 35 cents on the week. So my first question to you, Warren, is do you agree with our thesis that a bottom may be in for the uranium stocks?
I think it's a really good thesis. I think there's a heck of an argument that can be put together that there is a bottom here. More importantly, though, my gut's telling me, not unlike your own, that we've got a bottom in here. And when you're looking at $18 spot in a market where virtually nobody makes any money at that level, that's usually a good indication that it's not going to be there for a very long time. So I think we do have a bottom in, as you know. Before the price of uranium can go up, it first needs to bottom. It seems to be bottoming here now, and a lot of smart buddies of mine who follow this a little closer than myself, just in all the commodities, they're basically saying, Warren, you got to watch the leaders in the industry because the stocks will move before the commodities. And that's exactly what kind of happened here. You had Cameco running real hard before we even got a little bump in uranium price. So there is money, and some serious money, moving into the uranium space, absolutely. And I think those investors are thinking the exact same way we are. We've got a tremendous and violent run in a number of commodities you'd never, ever expect to run. For instance, the one that surprised the hell out of me, including, I imagine, the market too, is thermal coal. Like, didn't we relegate thermal coal to a nonsense commodity because nobody would ever expect thermal coal to go up in price because everybody expected the demand for it to completely crater over time. The move in met coal, the violent move in met coal, was not expected. And even before that, when gold bottomed and turned, everybody was calling for gold to head lower, and it surprised everybody and just it bottomed and had a pretty strong turn. But the violent move of thermal coal and met coal has been just pretty interesting to watch. I think it caught a lot of people by surprise.
Yeah, you're right. There's been a lot of wacky action that's been going on the last couple months, especially since the elections in the U.S. And Warren, I'm really excited. I've watched a couple uranium bull markets play out in my short existence. One of them was kind of a mini rally back around 2011, and then the one before that was quite epic when uranium ran from $7 a pound up to about $160, which happened from 2002 to 2007. And the interesting thing about the uranium stocks is that there's so few of them, especially at the bottom of a cycle, and it just takes a little bit of money to rush in for these stocks to truly move. So any mining speculator sees this with gold, but it's very exaggerated, I find, with uranium stocks because there's only 10 or 20 of them that are even available to purchase. So do you expect this rally that's started to continue for the next few months, and how big do you think it could be?
It's difficult to say how big it could be. One thing for sure is on the demand side, demand is really shaping up well here. We've got Trump and his team positive on uranium. So the U.S. is the biggest consumer of uranium in the world, and they seem to have taken a pretty positive approach towards uranium. So I think that's caught a lot of people by surprise. So a lot of people are starting to really start rolling up their sleeves on uranium. The other one is Japan, the big consumer. It's a big factor in the market. people, I think, have been surprised at how slow they are with respect to firing up their reactors, but that'll happen gradually. They'll definitely not restart all the reactors, but little by little, I think we'll get demand back there. And then you've got, the enrichers. When the market turns, there will be less upgrading of the uranium, and a lot of this capacity will be taken off the market. So that's several million pounds a year coming off the market too. So I think we're definitely poised here for a turn, and it's pretty exciting. How violent that turn could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally. I'm not saying it will be that, but it definitely has a potential. I think a lot of people on the consumer side, with respect to the big utilities, they haven't locked in a lot of the uranium going forward, and when they come to market, they'll act as a herd and they'll all jump in all at once, and there are few people they can buy from, and those buyers know there's only so much supply they've got available to them, and they'll just start ramping up the price as quick as they possibly can. So I think what we'll see, the signs you want to start seeing is a little bit of strength, a little bit of bottoming, and continued strength in the spot price. But we've got to see some contracting going here, probably at the $40+ level, not unlike what Berkeley did with their $41 contracting. But we start seeing some contracting. That gives us an indication that we are getting some utilities stepping up, and they are concerned about supply, and they're locking in supply. And when that floodgate opens, that's where the real fun could start, as everybody runs for the exit at the same time, all trying to lock in contracts. And the suppliers of uranium will respond accordingly and start cranking up the price. So that's how I kind of see it happening here.
A couple weeks ago, you spoke at the Mines and Money conference on the uranium panel. I heard it was a fantastic panel with a lot of debate. I believe your take was very similar to that you're sharing today, in that a bottom was in or near. What were some of the main talking points or maybe interesting points of contention that came up during that forum?
Well, yeah, there were a couple of interesting things. One point I brought up is a lot of people were saying, well, Japan has lots of uranium and we're going to see that back into the market. I've spoken to some of my friends who really know the Japanese market, and they tell me that the unique thing about the Japanese is that they actually take the uranium and put it into fuel bundles for different specific reactors. So those fuel bundles are already assembled, and for the Japanese to disassemble those fuel bundles and convert it back to commoditized uranium that they could sell in the spot market, the price is just not there. If the price was, considerably higher, the Japanese might do that, but right now that's not going to be coming to market. So that's one concern a lot of people had that I really don't think is a real one. Another bone of contention was we had a former uranium trader who said that he could make a few calls to Russia and lock up a whole bunch of spot. But there was some disputing of that from some of the other panel members, basically saying that they did not believe that is the case. The interesting thing we've got here too on the whole spot thing is this premium on the UPC, and the real answer to that question is when UPC does their next raise at a premium to spot, can they indeed get that spot purchase filled, and how difficult would it be? I spoke with David Cates some time ago, last time they raised money, and he said it wasn't that difficult. So it'll be interesting to see, one, how much money could UPC raise here at a premium, and two, how difficult will it be for them to lock in those pounds. And the great thing about it being at a premium is there will be a lot of money flowing into UPC, and hence a lot of money flowing into the spot market to sop up the sloppiness here.
Warren, let's dig into that a little bit deeper for listeners that are not well informed on Uranium Participation Corp. Can you explain Uranium Participation Corp, what it does, how it acts as a proxy for the spot price? And then your point you just made is fantastic. If we can dig a little further into that on the ability for the company to actually source more spot. Yeah,
that's really the key is how much spot is really out there. Nobody really knows. As you know, my rough recollection is there's 175 million pounds of uranium consumed every year. 150 million comes from primary producers, and 25 million from secondary sources. So these secondary sources are difficult to pin down. You just don't know where it's coming from. You don't know who's selling it. You don't know the price pressures they're under. The other interesting thing about this, too, when I talk to people who are down on uranium and they dump all over it saying, well, there's always this secondary supply. And then I kind of remind them that, well, take a look at gold. I remember when the Canadian Central Bank was selling tons and tons of gold at $250, $300 an ounce. And, then one day it was all done. And before you know it, gold blew through $1,000. So we just don't know how much is on the secondary market, how much is and what the motivations of these sellers are and what their time frames are. So it's really good to see if UPC does raise dough, and I imagine they probably would. It'll be interesting to see how easy it is for them to source this and how deep that spot market is with respect to on the sell side. A lot of my friends who are very experienced in uranium tell me it's very, very thin. The price of uranium dropped to $18 in very low volume, so it could be interesting. We could see it uranium here short term spike up a little bit, and that could get some of these utilities starting to get a little concerned and possibly locking in there a little bit. Colin, with respect to explaining what UPC is, basically it was created some years ago to give investors the ability to buy spot uranium. As you know, it's difficult to go and buy uranium and put it in a safety deposit box, or obviously even handle it or carry it. So it was set up some years ago for investors to have a very specific exposure to uranium, and it basically trades as a premium or a discount to the spot uranium price. I spoke with some of the managers of the UPC some months ago, asking why they wouldn't take their uranium and sell it on the term market at $40 rather than have it mark to market at $18. But they basically said that's not their mandate, and their mandate is to give people exposure to the uranium spot market. Because the risk is, of course, if you did lock into long-term contracts at, let's say, $40 with some of this uranium, and then uranium spiked to $80, you would not get the one-to-one relationship you would on the spot market. So that's really that's one of the go-to vehicles that people use to get exposure to spot uranium.
Right, and another key point to make, uranium is truly a peculiar commodity in that the end users or the utilities are not hyper price sensitive on it. I've heard various numbers thrown around that the cost to run a nuclear power plant, the fuel itself is only 2 to 4 or 5% of the cost between construction costs of building a nuclear plant and running it. The fuel is not a main component. And what that means, of course, is that uranium price can run quite a bit without actually affecting the output cost, the energy being created. Can you touch on how that might have a strong effect on the swing that we'll see here?
Yeah, no, it's a very important point, and that's exactly right. If you are managing uranium purchasing for a large utility, you really do not want to risk not getting the uranium in because of this. The most important thing is that you get the uranium in, because if you don't have the uranium in, the reactor will not run. And you're a little less price sensitive than other fuels for power generation. The contrary example is natural gas. Right now, the nukes in the U.S. are having a really hard time competing against natural gas because natural gas is a massive input to a natural gas power plant. Natural gas power plants aren't expensive to build. You can build them quickly, cheaply, but the fuel costs are just a massive component of the cost of electricity. So that's where the nukes have been under pressure in the U.S. specifically, where they've got the cheap shale gas have been hitting the market. So there's another interesting bull case, at least in my view, is the nukes are competing against natural gas. A lot of these natural gas power plants were formerly coal and been converted to natural gas, or some of them were natural gas from the beginning. But the cheap natural gas has really made natural gas power generation unusually inexpensive in the U.S. And so the issue there is I've watched natural gas over the last several decades, and one thing about natural gas is it's highly volatile. So I know some natural gas traders who think it's just a matter of time before all these utilities who have been lulled into thinking there is some level of stability in the natural gas price they're going to get a rude awakening one day when the natural gas price spikes and the input costs of some of these power plants really start to crank up, and that'll be really good for the nuclear power industry in the U.S. if that happened, and I think there's a good chance it might.
I'm sure all of our listeners are wondering the best way to get involved in the uranium space or how you might play it. Before we get into that, you're a major shareholder of NextGen Energy, and NextGen's asset is truly ridiculous. If you were to compare it to the grades of gold comparable from uranium, and then just look at the sheer size, it's one of the most massive and potentially economic deposits on the planet at this point, and still growing. Warren, can you just introduce listeners unfamiliar with the story to NextGen briefly and why you like it so much?
Yeah, NextGen's basically a Vancouver-based company that's made a massive discovery in the Athabasca Basin. It's in the western part of the basin. For anybody familiar with Fission, it's just to the northeast of Fission's property. So it's in the western part of the basin. The western part of the basin does not have a milling capacity. All the milling capacity is in the eastern part of the basin. So in order for the western part of the basin to work, you need a massive new discovery, and I think we have it here, and it's pretty obvious we have it here with NextGen. NextGen basically found 200 million pounds of uranium by their latest 43-101, which is hugely out of date. That was done in the first quarter of 2016. I'm expecting in the first half of 2017 to see a resource update from them. They did 50,000 meters of drilling to get a 200 million pound resource. They've done an additional, since then, 70,000 meters of drilling. So I'm expecting a pretty significant step up in the resource to many hundreds of millions of pounds. And the important thing, too, is if you look at the drill results over the past year since the last resource estimate, there have been very few misses. And the grade shell has expanded. So it'll be very interesting to see what the resource estimators think has happened to the resource at NextGen. But what I love about it is the core portion of it is extraordinarily rich, and that's the stuff that gets me really excited. Is the core of the A2 shear? It's the equivalent of 6 ounces per ton gold to give listeners who are familiar with gold a metric. So in other words, this is an extraordinarily rich deposit. The thing I love about it too is it's in the basement rocks, so it's not like the two mines Cameco has where they're in the sandstone and you have water ingress issues. It's a pretty straightforward mine, underground mine. The grade's there. It's in competent rocks. There should be no significant water problems, so it'll be a pretty straightforward mine to mine. And I'd go as far as to say I believe it'll be the best uranium mine in the world when it's all said and done.
Warren, it goes without saying that since you're a shareholder and what you've said about NextGen, that you probably would look at that as being a great way to play the potential uranium boom that may be starting here. Any other advice, ideas, or strategies on how to play?
Yeah, well, now the reason we're involved in NextGen is we are running a fund. So we're not like a typical retail investor who could play little, smaller companies like, Western Uranium, Mega Uranium, or Appia, or names like that. So that's important to remember. And NextGen has a market cap of many hundreds of millions of dollars. So that's really good for us. So because we need to put sizable amounts of capital to work. So that's the first important thing to notice there. But the way I'm playing it, and the reason I like NextGen, which might be a good reason for some of your listeners who want to play uranium, is that I try and buy a company in a sector that I generally like. Like, for instance, predicting the price of uranium, it has destroyed more reputations than I can imagine. I know, Cameco has been calling for a turn in uranium for some years now, and they've been just woefully disappointed. In Cameco, they're the sharpest guys, or some of the sharpest guys in the street with respect to uranium. And they have a lot more information than I do, a lot more information than a lot of players do. If they're having a difficult time predicting what's going on in the uranium space, guys like you and me and the typical retail investor will have an almost impossible time. But the one thing, Colin, I agree with you on is I think we're near the bottom here, if not at the bottom. So why don't we do this? And this is why I'm in NextGen. I like to invest in companies that are adding pounds. So if NextGen right now is 200 million pounds, then add another 100 million pounds, and add another 100 million pounds, and then they're basically increasing their resource all the time. So what it's allowed me to do by owning NextGen is I got in around 60 cents. The stock's now in the low twos, around $2.30. I've basically been able to almost quadruple my money in a falling uranium market. The uranium market was off 40% this year. So by buying a company like NextGen that has a rapidly increasing resource, I'm able to take advantage of that even in an ugly market. And then if the price of uranium does indeed turn, and there's of course no certainty on that, but when it does turn, we'll get a violent turn in the stock, and we'll get a double whammy. We'll get their increased drilling, increasing the resource, plus we'll also get the move in all the uranium stocks. So what I'm trying to play here is a term used in hedge fund land, calling it, I'm trying to buy alpha. And basically what I'm buying is a company that, despite where uranium goes, or it goes up, down, sideways, whatever it does, it's adding more and more resources to the story. So the price should go up even in a falling uranium market. And then if the uranium market does indeed turn or remain flat, it could move up substantially higher very, very quickly. So it's worked out really well for me in the strategy. The stock has performed very well, even in a very poor spot uranium price market. So I'm very hopeful when we get a turn, and who knows when that'll happen. But when we do get a turn, we get the double whammy of not only the benefit of higher uranium prices, but also they'll be just adding more pounds every day they drill. So that's why I like that. When I look at compare that to, let's say, a Cameco, Cameco's more of a play just on the recovery of the uranium market. The only caution there I want to remind investors about is it is quite blue chip, and they have a substantial amount of their production hedged. My recollection is it's in the 40 to 50 range. I might be wrong on that, but they have sold forward quite a bit of their production, so you won't necessarily get a big. You'll get a very strong move in the price of Cameco, but a number of their pounds are hedged. It's kind of like when the gold companies were moving and the price of gold's moving up. The ones that are unhedged move quite a bit more than the ones that are hedged up, and that's what we saw that in the last gold cycle. So we'll see a little bit of that happening here. And then another name too is guys probably like playing Denison. The Denison's a bit of a mixture. They've got some interesting new projects, and so those will probably be the three of the ones I think investors will want to play a little bit of the bigger names. And then of course on the smaller names, there's a whole host of them floating around that people can play. And I think anybody who's been around a period of time in the uranium space is aware of Palatin's move the 2 cycles ago, the really big cycle where it went through $100, where the stock went from 1 to 2 cents to $10. So I'm definitely keeping my eye on for the next the Paladin of the next cycle, and if I find it, I'm going to jump all over it. And it's a really the uranium price spikes can be quite violent, and the amount of money made could be monumental if you catch it right. So I'm definitely keeping my eyes and ears open for any of these super small micro caps that might make a discovery, and you can combine a big discovery with a bullish uranium market, and you can make a ton of money.
While on the topic of NextGen, I have an interesting question that just popped up in my head, and that's regarding the end game for NextGen. It's quite peculiar that a company starts out, discovers a deposit like this, and grows it to the sheer size and magnitude that it's at. And you look at NextGen's market cap is now pushing $700 million. Compare that to Cameco, which is viewed as the largest uranium company for the most investors look at. Their market cap is just a little over $4 billion at this point. And that brings up the question that unless NextGen anticipates mining this ore themselves, the game is always in the resource sector to get bought out by a bigger guy. Very interesting situation where NextGen is growing so quickly compared to the big guys in the room. What do you see as being the exit for investors? Yeah,
well, that's a very interesting point. The key here, Colin, is I've been involved in a lot of these big discoveries, and the most important thing that I've learned over the years is that a tier one discovery like NextGen always gets picked off by the majors. And that major might be a large oil company looking to diversify out of dirty hydrocarbons into clean energy. It could also be a large multinational mining company that wants to have a large footprint in the uranium space, or it might be a uranium player like a Cameco or a Riva or something along those lines. But the important thing to remember is, in a case of a tier one discovery like NextGen is, they do not survive to get into production. And I am not aware of, in my history of 30 years in the business, off the top of my head, I do not know of a tier one discovery that has been made by a junior and actually been put into production by a junior. These types of discoveries are very sought after by the majors, and they want to pick them off. And now, specifically to your question about Cameco, the world has a great degree of respect for Cameco with respect to their operations. They're one of the largest operations in the world. They operate the only two mines in Canada. The Athabasca Basin is a tremendous place to produce uranium. It's a stable jurisdiction. Saskatchewan is very supportive of uranium mining, and they benefited greatly in the past from it. So Cameco, their market cap is under a tiny bit of pressure here because of a problem they're having with the Canada Revenue Agency, and I believe the lawsuit is in excess of $2 billion. So that's going to be playing out here for a year, over the next year and a half, unless they're able to get that settled. But that's putting a bit of a damper on Cameco's price. So, although it's a $4+ billion market cap right now, I think there is a substantial discount as a result of their activity with the CRA. And long term, as a Canadian, I think it would be tremendous to see Cameco cut a deal with NextGen and merge the two companies. But there's a lot of moving parts, and a lot of companies like what NextGen has found, and you never know who wants to be in the uranium business. But I do know that Cameco has some mines that will be winding down. One of their mines, I think, will be winding down like Cigar Lake in about the time that you'd have NextGen into production. So it would fit like a glove with Cameco. But again, Cameco's having a bit of a tough time with the Canada Revenue Agency right now. So there is a good chance there might be some other players stepping up to the table too. So it'll be interesting to see how the whole NextGen situation develops. But one thing for sure, whoever ends up owning NextGen will have a pretty exceptional deposit. And I'm not sure if you are aware, Colin, recently Li Ka-shing has taken a substantial position in NextGen, and so he definitely sees the future in this deposit also.
Yeah, that's a great endorsement from Chinese billionaire money. Warren, you made a fantastic point in an earlier part of the interview about the gains to be made from microcap stocks, companies like Appy Energy, Western Uranium, GoviX. And as you're managing hundreds of millions of dollars, these companies don't quite suit your fund. However, for ourselves and our listeners, we're keen to find such opportunities. I just want to make a brief announcement that we are going to be making a very big announcement for Palisade on December 15th, Thursday of this week. And for investors interested in getting exposed to what we believe will be a truly epic bull market in uranium stocks, just stay tuned to Palisade Research and Palisade Radio. Warren, congratulations on making what's appeared to be a fantastic investment so far in NextGen, even through this bear market, and you're going to be one of the only fund managers out there that's going to benefit greatly from this upturn coming in uranium. So thank you for coming back on the show and sharing your thoughts.
You're very well welcome, Colin, and it should be a lot of fun to play this next uranium cycle.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?